All right, warm welcome everybody to a brand new week. It's Monday, the 29th of April, 2024. Now, let's quickly start, as always, looking at overall market sentiment as we get the week underway. For now, it's a pretty mixed bag across the board. Risk has leaned slightly more to the upside, but we're not really seeing that across major asset classes. It's mostly fixated right now in equities. Some of that also seen, of course, in FX with the high betas doing quite well. The dollar obviously lagging. The yen strong, but that's for different reasons, which we'll touch on in a second, of course, as most of you should already know. And then we're also seeing some upside here in bonds, which isn't a massive move, but we are seeing a little bit of a pullback in yields, which is also slightly more risk positive given the current situation where the focus for bonds right now, yes, is obviously on the economy, but it's been mainly focused on inflation and inflation expectations. And we've actually seen that very similar to 2022 divergence, where you're actually seeing bonds and equities, they're trading correlated right now. So even though it's not the traditional way that you would look at risk on from a bond market point of view, this is more fixated and more focused on the inflation aspects in the markets right now, which makes sense, more risk on looking at bonds up, yields lower. Now, in terms of yields, just quickly touching on this, there's a whole slew of events that the bond market will be focusing on this week. We will do a separate video for the week ahead, but we've got the QRA announcement, the estimates released today, official announcement on Wednesday. We've got a ton of US data. We've got the FOMC coming up. So the bottom line when looking at something like bonds right now, the dollar, equities, take the price action with a big pinch of salt, because what you might be seeing could be down to just position squaring. It could be down to people saying, hey, we've got a bunch of risk running on short bonds right now. Let's just trim some of that exposure. Let's just take some profit off the table. It might be some put activity making its way into the markets, or not puts specifically, but more options related activity in the markets as well, with a lot of players arguably wanting to hedge some of their key exposures going into a week like this. So the bottom line is, yes, watch the price action. As always, we track things like pre-positioning very closely. But don't be jumping to any major conclusions based on the price action. What we're seeing in bonds right now might just be a little bit of profit taking or just some hedging going into those key events this week. Now, like we said, bonds slightly up, yields lower. Equities doing quite well, with the key driver right now being Asia Pac. I mean, take a look at this upside. Hang Seng up another 1%, was a big mover last week. I mean, look at this. Week to date, we were up 8%, just a monster of a move. Kospi up 1%, CSI up 1%, A50 was close to that, but we are seeing a little bit of downside. No real key trigger here. For me, we've been looking for I don't want to call it a pivot into China, because that's not what it is. We've been looking for markets to just soften their view on China for the last few, what's it been now, 2-3 months now, still holding that A50 long that we've been running since the PBOC did that surprise cut a couple of weeks ago. Still see no reason to close out those longs, still like them running on the long side, and we're at least seeing a little bit more upside here. We've got some data coming up for China this week, which is going to be critical for the A50, as well as those antipodeans, especially the Aussie dollar. But again, we'll touch on that in the week ahead update. Now, apart from that, commodities not really doing much here today. It's a mixed bag across the board. You can see that in energy, it's pretty mixed, because you've got nat gas up, but you've got WTI Brent crude lower. Precious metals mixed as well, where silver is up alongside platinum, but gold is struggling. Base metals is mixed, with iron ore flat, copper higher. It's just a big mixed bag across the board. I've been very cautious of commodities. As you guys know, over the course of the last few weeks now, the only asset that I've really traded with any level of conviction has been WTI, and I've been patient on that all the way to really the start of April now. So, commodities are just a little bit messy at these levels. We'll look at positioning updates a little bit later as well. For now, I'm just hands off. It's not something that I want to touch right now. In my opinion, when you look at FX, when you look at bonds, when you look at equities, all of these things they've been trading more or less in line with very good fundamental catalysts and very good fundamental reasons. When you compare that to commodities, it's not been the case, right? It's been some pretty weird price action, some pretty weird flows, which just makes me cautious. If I can't pinpoint with a lot of certainty why something is moving the way it's moving, I just ignore it. I'm okay missing out on those types of moves. At the end of the day, we don't want to have a guessing game. right? We want to trade things where we know the odds are stacked in our favor, and I just don't know whether I've got a good enough edge with that in mind when it comes to commodities right now. Now, the big mover today, which everybody obviously should already be aware of, is the big move in dollar yen. I mean, earlier in the session, early Asia Pac, we had a weird move to the upside. I mean, let's go to a smaller time frame here. Let me just show you guys what I'm talking about. Let's go to the 1 minute. Huge rush to the upside, really nothing fundamental behind the move, just a huge rush higher. Whether that was additional positions going long, whether it was a couple of stops being triggered, we'll never know. But huge rush, taking dollar yen all the way from 158.60 to above 160. I mean, that's a monster move. You know, we looked at this, when was it? A couple, let me show you guys this again. We looked at this last week. You know, showing that massive move we had, you know, from literally from the 11th of March. Take a look at the size of the move that we've had. From the 11th of March, we've gone from 147 all the way up to 160. That's a whole lot of big levels being breached to the upside, you know. So I'm not surprised that we saw a little bit of possible intervention here. But before we touch on that, let's go from the beginning. So big move to the upside without really any real reason behind it. And then the market saw a first initial sell-off with just a lot of range-bound price action, with price not really doing much. And then all of a sudden, we started to see some real punchy downside. Now, even though this was a big move lower, don't get me wrong, this was much slower and much more smaller compared to the intervention that we had back in 2022, the September and the October interventions. I mean, I traded both of those two things live last year, and you didn't see nearly the amount of speed and size like we saw back then. So I was very reluctant on calling this intervention. For me, it might have well have been a big carry trade player out there taking some profit off the table, getting a little bit jittery on the possibility of intervention. Maybe it was a couple of stops being triggered. Maybe there was a couple of options that got triggered with the move to the downside. There's so many things that can trigger a move like that can cascade a move like that. And later on, I mean, we had a Reuters piece coming out saying that traders are citing intervention as the reason. Like, okay, well, yeah, I can also put a guess out there saying, maybe it is an intervention, maybe not. Look, without clear and without the Japanese officials coming out saying that it was a rate check, or without them coming out saying it was intervention, it could have been. But if it is, guys, this was a really meek attempt at doing so. You know, if you compare the size and again the speed of the moves we had back in 2022, this is nothing like it. We should have been much closer towards 152, 152, 152.50. That range would have been intervention on a similar level to what we had and speed to what we had back in 2022. If this was them, it was a really meek attempt. Am I trading this? Absolutely not. Look, I don't trust the BOJ as far as I can throw them. Even less so the Ministry of Finance. I just don't trust these moves. If it's a monster move and it breaks lower, fine. If you're looking to take advantage of that, good luck. I don't want to trade this higher. I don't want to trade it lower. I just quite frankly don't trust the yen. I don't trust the BOJ. The communications have been so crap over the course of the last few months. I have no conviction in trading this. What I am hoping for more intervention, because that is going to do quite well for the other trades that I've got running right now, like the Aussie versus the US dollar. That did pretty well, you know, on that possible quote unquote intervention moves that we had. But for now, you know, just take notice of the moves. Pretty meek attempt if it was intervention. I don't know. If it was, they're not serious. If that was intervention, they're not serious about it at these levels. But anyway, let's see what happens. It is going to be a main focus for the week, for the markets this week, and something just worth keeping on the radar. So I will have a week ahead video, CFTC update, all the other goodies available a little bit later, but that's just a quick sentiment update for where we are across markets as we get the session underway.